I'm Chris Versace, Chief Investment Officer at Tematica Research, and each week on our Cocktail Investing podcast, we look to break down all the noise you hear each and every week into clear investing signals. Here's an example of what we talked about on this week's podcast. Now, there was some other stuff too that you were kind of talking about. I know you talked about consumer confidence a little bit for May, but also too the housing market. And I know we got the housing start numbers recently, and it's fascinating to me, the housing market, because the prices just continue to creep higher and higher. And basic economics would say, hey, silly, supply and demand, which of course it is, because there's not a robust inventory level out there, and as a result, it's what we call a seller's market, and these housing prices continue to tick higher. I think you were saying that, what was it, Seattle, I think, right? You were saying something about Seattle.
Yeah, Seattle, actually, looking at the Case-Shiller, every month they publish an index of home prices across the U.S., and they look in particular at 20 different cities. And Seattle actually topped the charts with a 12% year-over-year increase, while New York City was at the bottom year-over-year increase with just a 4%. But what's noteworthy here, there's two things, is that one, we're seeing those home prices, like you said, they keep going up and up and up, and they're appreciating a lot faster than income. And that just can't continue to go on forever. And like you said, one of the big reasons for that is that there's such a lack of supply, and there's a lack of supply for two reasons. One, the building, because you've got what we're hearing from the realtors is that there's so much regulation that it's more difficult to get a home built. But also people are less willing to sell. Mm-hmm. So people are not putting their homes out on the market. But what really has me concerned, with that rise in home prices, we're seeing the return of the ATM home, where refinancing is all about cashing out. And we see that can be kind of dangerous, because if you keep refinancing, right? And I saw this in my neighborhood in San Diego, where people's home prices appreciated an astronomical amount, and they kept refinancing all the way up. Now, if they hadn't refinanced, they could be at the point where their loan was, say, 50% or less than the current market price, but they keep refinancing, right? So you get to where, say, your home is maybe 5% more than your mortgage, and then you have a big downturn in the economy, and son of a gun if your mortgage isn't now bigger than the price of your home. And if you're struggling, say, downturn in the economy, home is worth less than the size of the mortgage on the home, and then your job situation becomes a little dicey, that's when everything gets kind of ugly. Yeah,
that's the risk there is you're underwater. And it's just dialing back a second, where you're talking about people staying in their homes longer or not wanting to sell. It's fascinating in some respects, because people think, oh, you can sell your house and then you got to move somewhere, which means they too are
You've
probably
got to buy a new, more expensive home.
Right. Well, right. And they're looking at more expensive homes and where to go. The other thing on New York versus
rising
Seattle.
Home prices are not necessarily just a great thing, because it's only a really great thing for one kind of person. The kind of person who wants to sell their home and then buy a much cheaper one.
Empty nesters.
That kind of works, right? But if you need to replace your home, it's not so great. I mean, it's a good feeling. Nobody likes to see their home go down in value, but it's a lot more complicated, and it's really tough on that first-time home buyer when home prices keep going up, particularly if that first-time home buyer is saddled with big student loans.
Yeah, absolutely. One last thing on New York. I think I saw somewhere that New York rents were actually starting to fall. That was, I'm talking Manhattan. That was a little surprising. The other thing that was kind of interesting about what we're talking about in the housing market, though, is the mortgage side of the equation. Because if we look since the election day, mortgage rates are up about 0.75 of a percentage point. And we've got a Fed that's looking to add another point potentially in the balance of the year. I think that is going to hurt the housing market a little more.
Yeah, that's definitely a headwind.
Yeah. And the other thing, too, is apparently good old adjustable rate loans are making their way back, which in a rising rate environment can't be good for consumers and their disposable income.
But that also depends on whether or not, because these are long-term rates, and the Fed raises short-term rates.
That's true, but it depends on if they're getting a 5-year ARM, a 10-year ARM.
Yeah, exactly. But it all of this depends on what your long-term view of rates is. And I would toss out there that given the economic headwinds, which we will be talking about in our next issue of thematic signals, that there's a lot of deflationary pressures that can work to keep long-term rates down. And we are seeing a flattening of the yield curve where the short-term rates are going up, but the long-term rates, not so much.
Well,
and like you said, with the, you're seeing the rents roll over in New York. Well, how about a little reality check here on how everybody's talking about how great the economy is. Housing starts are actually down more than 20% on an annual basis at the start of the second quarter. Exports on an annual basis are down more than 4%. Capital goods shipments are up just about 2% so far in the second quarter with weak orders. So that tells us that the future's not looking so good. So we'll be looking at orders for what's coming down the pipe. Retail sales up all of 1.6% annualized. That is not an economy accelerating. And, if you take a step back and look at the big picture, this is the first time in history that we've seen the business cycle peak with nominal GDP below 5%. And this is also the first time we've ever seen the business cycle peak where core inflation was below 2.5%. So we're definitely in some uncharted territories.
Thanks for listening, and you can find far more on TomaticaResearch.com or simply subscribe to the podcast on iTunes.
Movie show, found myself an empty row. Thought the show was just all right. Same old Saturday night. Then I made the usual stop. Coffee at the coffee shop. Friendly face nowhere inside. Same old Saturday night. I really thought the papers I bought would help me forget you.